Hey, good morning, everyone, or good afternoon, wherever you are. My name is John Jimenot. I'm the Regional VP of Sales here at Angel Oak Mortgage Solutions. We're going to get started here in about a minute. We see a lot of people logging on right now, so look forward to it. I'll introduce our two panelists once we get started. So bear with us here give us about another minute and we'll get started. I hope everyone's having a great month. We'll talk about how we can make your business grow here and learn a lot about our non-QM products from our two panelists here. Give it about another 30 seconds. A lot of people still logging on. We're already over 100 people. All right, seems to be leveling out. Give about another 15 seconds. Okay, great. Let's get started here. Again, my name is John Jimenot. I'm a Regional Vice President of Sales here at Angel Oak Mortgage Solutions. Today, we're going this is our 12th and that we've done since last September. We've been doing them one a month. We've had great feedback and really an engaged audience. Just for the record, this is going to be recorded and we will answer all your questions. If we don't get to your questions here live today, we will definitely get your account executive to reach out to you no later than tomorrow and get everyone's questions answered. So this is not about how Angel Oak has done 7 securitizations since COVID. This is not about Angel Oak just surpassing $10 billion in originations of just non-QM business. This is really a deep dive into our products. So, and backed by popular demand, we have Stacey Flanagan, who I get the pleasure of working with day in, day out. Stacey, please introduce yourself.
I'm Stacey Flanagan. I cover the Tampa Bay area, Sarasota area of Florida.
Thank you, Stacey, and I get to work with Stacey every day, and it's a pleasure. So, also backed by popular demand, Oscar Ungo, who participated about 6 months ago in one of our webinars. So, Oscar, introduce yourself, please.
Hi, everybody. My name is Oscar Ungo. I'm also an account executive. I cover the areas in the country where we don't have boots on the ground. But I just wanted to touch on something really quickly that John mentioned. In 2020, everybody had hit record numbers. And if you read an article that was posted about 2 to 3 days ago on Housing Wire, it's expected or estimated that non-QM is going to grow nearly $300 billion over the next few years. So this conversation and this presentation isn't about us. This is about you and your future growth. So definitely, if you don't know who your account executive is, please add in the comment box that you want to get someone to contact you. They'll reach out to you today.
Yeah, Oscar, great points. And, if you look at the Mortgage Bankers Association saying refis are going to be almost half of where they were in 2020, so really, we really appreciate everyone on this call. It's scheduled to go an hour. We will answer questions even past that. So we really appreciate you taking the time to learn and get into the non-QM programs. So without further ado, let's jump in here. Again, this is being recorded, so just want to make sure everyone's aware of that, and we will get all your questions answered. So let's jump right into programs. But before we do, let's do a quick poll here. I love the results when they're kind of, hold on, I'm just going to try and pull this up. So I'm trying to, okay, we're going to take a poll results. Might need, hold on. Okay. So if you guys could participate, and again, use the questions, we'll get all your questions answered. How many of you have originated a bank statement loan in the last 12 months? So we'll give it about another 15 seconds before we let Stacey get into talking about the highlights of our bank statement program. Give it about 3, 2, 1. Okay.
John, I think the poll that you have up is the one for the DSCR program, though.
Sorry, Stace. So we'll get to that one. We'll do the base. Let me launch the bank statements. My apologies. Thank you, Stace.
No problem. It's one of those days.
Okay, we're going to put up the bank statement poll here. So if you guys could participate again, how many of you have launched a bank statement? Oh, sorry. My apologies. How many of you have closed a bank statement program in the last 12 months? I may have screwed this up. So anyway, previously we've shown, sorry. All right. So we're back here. Previously we've shown, and it's a huge opportunity. There are more self-employed people than there are VA borrowers available. So, and usually our poll shows about 75% have not originated a bank statement loan in the last 12 months. So there's a huge opportunity. Stacey, give us some highlights of the bank statement program.
Thanks, John. Yeah, so the bank statement program is definitely our biggest program that we have. It's such an amazing program for many different reasons. It's for those self-employed or 1099 borrowers that don't show, all their income on their tax returns. They have so many write-offs that when they look at their tax returns, they might look at their bottom line is being able to afford, let's say, after all their write-offs, they can afford a $300,000 house. And that's great. But when we do a bank statement program, we are just averaging the deposits that are going into their bank account, whether it's using personal bank statements or business bank statements. And that could sometimes double, triple, even quadruple their buying power. So because of all their write-offs, maybe they're again stuck to a $300,000 purchase price. But when we average their bank statements, they have all these deposits going through. They can afford a $500,000, $600,000, $700,000, $800,000 purchase price. So it's really a great program because anybody that is self-employed is going to have write-offs. They are going to write off as much as they can because they don't want to give Uncle Sam, as much in their taxes as they have to. So this program is great for those borrowers. Again, we use 12 or 24 months of bank statements. They can be personal or business. We go up to 90% loan to value. We go up to 3 million loan amounts. The minimum loan amount is 150, but we go up to 3 million. And of course, if you have one over 3 million, your AE is going to fight tooth and nail to help you get that done because we want the big ones as well. And you only have to be out of a foreclosure or short sale or even a bankruptcy for 2 years. So again, that borrower that has, usually your self-employed borrowers have a good credit score. They have money down. They just, again, because of their tax returns and what they show or lack of showing, this bank statement program is wonderful. And the other great thing about the bank statement program too, I have a lot of brokers that maybe weren't around back in the non-QM days. We used to call them the subprime days. So they're not used to a little bit higher rate. So one of the pushbacks that I get is, well, how do I sell this higher rate? Because of course, going bank statements is going to be a higher rate than a conventional loan because you're using an alternative source to show your income. So a lot of times that question is presented to me. How do I sell that? How do I sell that, rate that's maybe a point higher, a point and a half higher than conventional? And I just tell them, I said, don't be afraid to sell it. It's so easy. And these bank statement borrowers, they're not balking at the rates because they know they can show all of their income and pay Uncle Sam 33%, or they can pay a 5.5% interest rate on a bank statement program. I mean, it's a no-brainer for them. So don't go into it scared or nervous because honestly, these borrowers are so happy to be able to get the true buying power that they can afford. Another thing on this program, we do purchases, we do refis, cash out or rate and term refis. I'm looking at your screen now, John, so I'm sorry, I kind of went off kilter from this, but the other great thing about this program is we offer the interest only. Interest only is a 40-year interest only. So the first 10 years is the interest only, and then it converts to a 30-year fixed. Again, a little bit more buying power for your borrowers, and in turn, a bigger loan sizes for you guys as well. We do single family, 1 to 4 units, and we also do condos. And in my area, non-warrantable as well as Oscar's area, non-warrantable condos is huge for us. So if you do have a non-warrantable condo, that is something that we do. Some of them we do, some of them we don't do. So just reach out to your AE. First question they're going to ask you is, why is it non-warrantable? If it's because it's a condotel, unfortunately, that's not one that we do. But if it's because the HOA has no reserves or it's 100% investor concentration, those are some examples of ones that we do. And we do these non-warrantables on all of our programs.
Yeah, Stacey, great points. Oscar, a couple questions already coming in. Please feel free to ask any questions you have coming through there. Oscar, give us a little bit of background on how we calculate the expense factor for our bank statement program.
Sure, I'm definitely going to dig into that. There was a point that I wanted to make, just two things that you mentioned, John, and that Stacey mentioned, and we've mentioned early on. Of the $300 billion that's projected to closing, none of that market is being created. That's a market that's out there. And so this bank statement loan is serving a need that's absolute for those self-employed people that don't qualify with their tax returns. So if you're looking for a niche that you want to capture, this is almost an ocean of people, just a population of people that you want to go after. So after this call, you should be more than comfortable to be able to start marketing this bank statement loan program. Now, I'm going to go into how we calculate the income. Was that the question, John? How we calculate
the calculated income, and specifically a couple of questions we had regarding expense ratios.
Absolutely. So we take either the 12 or 24 month average, okay? And as far as how to collect those statements, why would you go with a 12 or 24 month average? I bet that me and Stacey are equal in that when we encourage you to tell your customers that you want to collect 24 months of year-to-date statements from your client. The reason for that is because it's just more flexible then to go ahead and convert that to the 12-month option if necessary, rather than having to go back to your client to request another 12 months of statements. On top of that, if your client qualifies with the 24-month option, then we give them the benefit of a lower rate. So that is one way. So we're going to take either the 12 or 24-month average, and then because businesses do have expenses as a standard, we apply a 50% expense deduction, right? That's how much we take out, okay? Aside from that, if the business's expenses are actually less than 50, then the floor that we can use is 15%, but that's for those types of businesses who may be working from home, they're consultants, they have less overhead. They can be possibly, we see this all the time, realtors that also have very little overhead. So those are people that you want to reach out to. Other examples of self-employed people that you come across every single day could be the owner of the barbershop that you frequent, the salon owner, the attorney, someone that owns title, maybe even other brokers that just don't do non-QM that also need to get a loan for themselves. Stacey and I'm sure we see this all the time.
Yeah, so thanks. And Stacey, go ahead.
Yeah, I also wanted to make a point too. You guys, we calculate this income for you up front. So even on a TBD property, you send your AE, your 1003, the credit, and all your bank statements. We're going to get that income calculated for you up front. So this is going to be a great selling point for you guys to use with your realtors, saying, you know, hey, I'm not going to waste your time having you go show houses that they may not qualify for. I'm going to tell you up front, this is the price range that they need to shop in. So the great thing about it, again, we do it on a TBD property. You're going to gather those bank statements. We're going to get them reviewed, come back within 24 to 48 hours and give you that monthly income and apply that expense ratio like Oscar was talking about, either the 50, 30 or 15% expense factor. So then you guys know what your income is that you're working for. And again, that lets you know what kind of purchase price that they can start shopping at.
Yeah, and as Stacey mentioned earlier, you know, when we give you that calculation, you know, the odds are we've increased that borrower's buying power probably 2, 3, even 4 times. So, so hopefully, Joe, that answered your question there. The other question was, Oscar, what's the DTI on our bank statement program?
It is 40 on the front end, 50 on the back end, unless the LTV is above 85. We'll go up to 90%, but the back end DTI at that point is 45. On non-owner properties, it's 50.
Okay. And then Stace, Rod wants to know here, how long does it take to get that bank statement calculated?
So again, they're running 24 to 48 hours. I find the average right about the 24 to 36 hour mark. I find them at. I rarely see it go to the 48 hours. So as they're doing the income calculation, your AE is scrubbing your credit report and your 1003 or 3.4, whatever we call it nowadays. We're scrubbing that to make sure that everything else fits the profile of the program that you've chosen.
Oscar, talk about a borrower who maybe has W-2, or a spouse that maybe is W-2'd, or they're self-employed, and that, we have a couple of questions here about that.
Sure. So something Stacey mentioned there, if you haven't done non-QM yet, and your hesitation has been just not necessarily knowing too much about the programs, the fantastic thing is that with us, we're working with you. We're helping you structure the loan up front. Stacey and I, and any other aide at the companies, reviewing the 1003 and the credit report to make sure that the borrower checks all their boxes, and then our bank statement department is calculating the income. So just as an example, when you have a borrower that you may have a borrower who's self-employed, you may have a co-borrower who is a wage earner that earns W-2, you'll want to plug their employment on the 1003, and you'll also want to include their income on there as well. Our bank statement department is going to back that out because we need to calculate what the self-employed person's income is if those funds are being deposited into the same account that we're using. If those funds aren't being deposited into that account, then that's perfectly fine. In underwriting, we will not be conditioning for tax returns for that wage earner. We'll take the last 2 years W-2s and pay stubs.
It's nice Oscar works at one of those energy efficient offices. When there's no movement, the light goes out. So, hey, live. I love it. So, Stacey, what about a bar? Shane's got a question here. What if you have a borrower that is W-2'd, like a wait staff or bartender? They're W-2'd, but they're heavily compensated with tips. Does that borrower qualify for our bank statement program?
Unfortunately not. They do have to be either fully self-employed or 1099. That industry is so hard. I mean, we've all done it. We've all been wait staff and bartenders to get through college. So I totally understand that. But unfortunately, that's one that we are going to have to go full doc on.
Yeah. So Shane, unfortunately, it's not probably the answer you wanted, but unfortunately, that's where it is. Stacey, maybe clarify. We're getting a couple more questions here regarding really how do you qualify that expense ratio less than 50%? So maybe you can throw out some type of industries and stuff like that.
Yeah, so again, like Oscar said, our review team will default to 50%, 50% expense factor. If that works and your DTI is fine, we go with it. Nothing else is needed. Now, let's say we need to use more deposits, a bigger percentage of the deposits. So we can look at what they do for a living. How many store locations do they have? How many employees do they have? Do they work from home? We have a bank statement questionnaire that we send to you for your borrowers to fill out that's going to ask those questions. They might also provide a website. We can jump on as AEs, jump on their website, and that sometimes will tell us how big the company is. If it's a small one location, maybe 2, 3 employees, then using a 30% expense ratio would be something that would make sense. Somebody that works from home, like an IT guy or 1099 borrower, they're going to have very little overhead. So they're going to probably be in the 15% expense factor. And the way that we're able to use that is we're going to require a letter from their CPA or licensed tax preparer stating that the expense ratio for that business, maybe it's Joe Schmo's auto detailing. So the expense ratio for Joe Schmo's auto detailing is, 28%. Okay, now I know that it's less than 30, so I'm going to be able to use 70% of the deposits. So again, as using as much as 85% of the deposits, and that we're going to take a deeper dive on what they do for a living. Now, somebody owns a restaurant, maybe they own a food truck. Okay, food truck isn't going to have the overhead like a full service restaurant. That's going to be something that's going to have a very high expense ratio. So you and your AE will just look at what they do. Again, how many locations, how many employees, to help determine what that expense ratio can be. But again, if 50% works, go with it. You don't need the expense ratio letter from a CPA.
Right. So Karen, hopefully that answers your question regarding expense ratios less than 50%. And as Stacey said, and Oscar has mentioned, your account executive is going to hold your hand through that entire process. There was another question here. I'm going to put on my glasses so I won't. Jonathan asked about rates. We're going to show you a really cool tool, probably 3/4 of the way through this, that will show you how you can get access to rates and scenarios 24/7. So really appreciate that. Couple other, I think you mentioned it early, but Oscar, what's the maximum LTV?
90%.
Okay. And what credit score?
That includes no MI.
Okay.
And
what credit score for that, Oscar, please? Sorry.
700.
Right. And Stacey, if you could, someone else asked a question here regarding interest only. Can you detail how that interest only works and how we qualify that borrower with interest only?
Yeah, so the interest only will do up to 85% loan to value. I still have to look at, we change things enhance things so frequently.
Well, Stacey, while you're looking that up, we've had, and I'm glad everyone's on this call because things are changing quickly. And as Oscar mentioned, your account executive has the latest and greatest, but we've had 33 enhancements in the last 13 months. So to Stacey's point, things are changing, they're changing rapidly. So go ahead, Stacey.
Yeah, so we do go to 85% loan to value on interest only. You do need at least a 700 mid score to qualify for interest only. It's a small hit to the rate to be able to do it. And again, it's a 40-year interest only. So the first 10 years is interest payments only, interest only, and then it converts to a 30-year fixed. So you don't have to recast or do anything like that. You just pay your interest payments for the first 10 years, and then it goes to a fully amortized 30-year fixed after the 10 years is up.
Thanks, Stacey. And then one last question. We've got Shane asking, do we count all the deposits, Oscar?
If we're looking for true income, so there will be things that we don't count that will be excluded. For example, if someone goes to a Target and they return something and then you see that credited back to the account, that'll be omitted. If there are large and unusual deposits that don't go with the monthly average that your borrower is depositing, if there is no history of those deposits, no patterns of those deposits, then we may ask what they are. Some businesses can be seasonal, and so we may need some extra documentation just to make sure that that is income. But that's how we take a look at deposits.
Yeah, but as Stacey mentioned, earlier, we're going to do that all for you up front. You're not sending your borrower out shopping for anything, and that is the income we're going to use in underwriting. So we also expedite the underwriting process on that too. So, and then Karina had a question regarding the FICO for the interest only. Karina, I'll answer that question because I just looked at it. 700 credit scores required for interest only. Hey, we're 25 minutes past the top of the hour, so we're going to go into our next program. We will get all your questions answered. We really appreciate your interaction. And we're going to have Oscar give us a highlight of our Platinum program. So Oscar, please take it away.
Absolutely. So our Platinum Jumbo program, we coin as a just miss prime jumbo product. You've got a lot of borrowers, especially today, that are out borrowing larger properties that require larger loan amounts. And prime jumbo is just a really, really, really difficult box to fit in. So we have more flexible requirements on the program. Quick example, I mean, we'll go up to, this is brand new, we're going up to 95 LTV, so 5% down on a primary residence with only 6 months of reserves, no MI. That's amazing. So 5% down on a jumbo loan with 6 months of reserves. Most prime jumbo lenders are going to require a whole lot more than that. Other examples that I see of borrowers that will need this product. Typically, you may have borrowers that have too many finance properties, and normally borrowers that earn a good amount of money will have other investment properties. We have no finance property limit when you're purchasing an owner-occupied property, and even then, if it's a second home or investment, the cap is 20, and we can always go over with exceptions. So that's one feature. Another thing is expanded DTI on the back end. So if the LTV is below 90%, we're going up to 50% or up to 90%. We can go up to 50% on the back end. That's more than you would on a prime jumbo loan. The product is extremely popular with self-employed people. We don't have a liquidity test, and we only need a borrower prepared P&L on the product. One more feature that I think isn't covered enough. It's an amazing option. We can do 1-year tax returns. They need 2 years of self-employment, but 1-year tax returns with only 2 years of self-employment versus the 5 years that are normally required. And I mentioned already, reserves are only 6 months versus the reserve requirements that they normally need which would be normally over 12 months on an owner-occupied property, and then all other finance properties. We just need 6 months of reserves on the subject.
Yeah, so great points, Oscar. And really, and we talk about recent enhancements. That 95 is fairly recent, so a great program. Stace, we have a question here. What's the maximum loan amount at that 95% LTV?
$2 million. Let me double check myself.
At 95, it's $2 million.
That's insane. That's a great. That's awesome, especially. And one of the other things that Oscar mentioned, and Stacey even mentioned it on the bank statement program, we could do cash outs. I mean, everyone has really acquired a lot of equity in their homes. And the thing I personally love about the cash out, you're taking 3 other people out of the equation, right? You know, you're taking a seller, a seller's agent, and a buyer's agent. So I love the cash out transaction. And then Stacey, we've talked about it a lot, or Oscar, feel free, either one of you guys want to talk about delayed finance, and especially in this hot market. Oscar, if you want to take that.
Sure, absolutely. And I'm glad that you mentioned it because I've got plenty of those right now. And you mentioned being out of the equation. If a borrower's buying a property cash, we're out of the equation. So something a lot of loan officers and brokers that I work with, what they're doing is they're educating realtors on how they can help those borrowers that are buying properties cash, get their money back, and then leverage that to go buy more properties. Cash is king, so it's a very popular option. It's extremely popular with the bank statement loan program. The benefit is that we're going to allow you to cash out up to our max purchase LTV requirement, as long as they qualify credit-wise. So a quick example, someone buys an owner-occupied home, and we can go up to 90 LTV with a 700 score. They can get up to 90 LTV off the purchase price with that option. It's fantastic.
Great program. Stacey, anything else to add regarding our Platinum program?
No, it is a full doc only. I just wanted to make sure that everybody knew the 95 was not on the bank statement. So the Platinum is the full doc only. And again, Jumbo's up to 3 million at 80% LTV, up to 2 million to 95%. And again, everything with us, nothing is black and white. We don't run DU and it either passes or fails. Every single loan is its own story. So if you're looking at the guidelines and it says, oh, I got to have 6 months reserves and I only have 5, I can't do it. You know, get with your AE, because everything is, you know, there's exceptions to be made on every file. So don't read too much in. Again, it's a guideline, not a rule. So we love to live outside the rules.
Yeah, Stacey, you bring up over 30% of the loans we close don't meet our guidelines. So, that's why, we have 2 subject matter experts on here. All of our account executives across the country are experts, and they will fight to get that deal done for you when it does make sense. So Stacey, I'm going to have you take us into our Portfolio Select, which is also another full doc only deal.
Yeah, so Portfolio Select is somebody that, again, full doc only, like John said. It is somebody that's maybe has had a foreclosure, short sale, bankruptcy recently. Our bankruptcy seasoning is 2 years. Our foreclosure, short sale, deed in lieu seasoning is only 12 months. So, a lot of people may have had issues. We're not going to fault them. They still deserve a home. They still have down payment. We go down to a 620 mid score on this program. So we do require them to have some sort of rental housing history. So, but again, somebody that's had a recent foreclosure, short sale, again, 12 months on that, 24 months on the bankruptcy. That's basically what this program is designated for those borrowers.
Yeah, Ross, we will get talking. We'll also, when we cover our quick quote tool, we'll talk about lender paid compensation there, Ross. So bear with us. We'll get to that probably in the next 20 minutes here. So Oscar, anything else to add regarding our Portfolio Select?
Yeah, I want to emphasize something that Stacey said. I don't think I can emphasize it enough. We have a saying that we coined here. When DU and LP say no, Angel Oak can say yes. So if you already are running DU and LP, and for some reason, it's like the Twilight Zone. Sometimes you get it, sometimes you don't. You already have the 1003 and credit report. We're going to show you a really neat tool next, where with a couple clicks, you can send your 1003 and credit to your AE. Your AE is going to review that, and especially on a purchase and cash out, you want to send that over because you can get somebody in a home today, and they can go ahead and refinance with you down the road, or you can help them get the cash out that they want. Maybe they want to go buy another property, maybe something that they want to reinvest in a business. So, a couple clicks, a 1003 and a credit report, you send that over to your AE, and we can review it. We're going down to a 620 up to $2 million. That's pretty powerful.
Yeah, and a lot of great questions coming in here. We're going to get to that quick quote tool. I promise. Oscar, go ahead and make some movement in your office. And yes, I believe your name is Leonese. Portfolio Select is a full doc only. So if it's W-2 or if they're self-employed, we're going to need their tax returns. So Oscar, we're going to run over to our investor cash flow program, which is before Oscar gets into that, I know everyone here on the call is feeling the pinch of what FHFA has done with the 7% cap for non-owner occupieds and second homes. We have seen this program, and not just investor cash flow program, but we've seen all our investment property non-owner occupied programs, full doc or investor cash flow, it's gone through the roof. We're up to about 35% of our total business is done on our investor cash flow. So Oscar, no pressure. Give us some highlights of investor cash flow program.
Listen, this is the program of the year. Okay. If you're looking to scale your business, then you have to listen in. Okay. The program is very easy. It fits a need that's absolutely necessary. Again, it solves DTI. It isn't considered on the product. We don't look at employment and we don't look at income. This program is designed for investment purposes. So if we're not looking at any of those things, what do we look at? Well, we look at a few things. We look at credit, and that's pretty loose because we go down to a 640 score. We look at assets. If it's, we can go up to 80% LTV, so purchase rate term, if it's a purchase 20% down.
Hey, Oscar, 1 second. Your audio is kind of getting a little choppy there. So try it again. If not, Stacey, Stacey, take over here for a little bit. Sorry, Oscar. It's not coming across clear. So
technical difficulties.
Yeah.
Yeah, so that, like Oscar was saying, the investor cash flow, what many of you probably know it as, is the DSCR, debt service coverage ratio program. This program is phenomenal. We are getting so much traction on this program right now, like John said, because of the cap on the non-owner occupieds with Fannie and Freddie. This program has really taken off big time this year. So you don't put any income on the 1003, you don't put any employment on the 1003. It's going to be based solely off the market rent on the appraisal. So basically what has to happen, we go down to a 640 mid score, so you do have to credit qualify that way. We go up to 80% loan to value. Now, what do we require for this program is that the market rent covers your PITI payment of the subject property. So for example, if the PITI payment for the subject property is $1,200 a month, we look at the market rent, which is going to be on your appraisal in the 1007. So you're going to order a 1007 with your appraisal. If that market rent covers is $1,200 or more, you're good. We only require a 1-to-1 ratio. I know a lot of lenders require it to be 120 or 125%, but we only require a 1-to-1 ratio. So if it covers your PITI payment, you're good to go. Now, the other huge thing that I absolutely love about this program, if your loan to value is 75% or less, and the borrower has at least a 700 mid score, you don't have to cash flow at all. So a lot of these properties that might be seasonal rentals, the market rent doesn't cover the PITI payment because they're basically doing the market rent over the year or the 12-month average. So maybe it doesn't cover your PITI, but you're at 75% loan to value or less with a 700, I don't care what that market rent comes in at. You do not have to cash flow on that property. That is huge. I don't know any other lender that does that. That is phenomenal, and we do a lot of it. So you can submit it at 80% loan to value. You find out that it doesn't work. Your option is put another 5% down, and it doesn't have to cover your PITI. So that is, program is phenomenal. Again, no DTI because you're not going to put any employment or income. And maybe you have two borrowers, husband and wife. Husband's a 680 mid score, wife's a 740, but she's a stay-at-home housewife. I don't care what she does. Take him off, put her on, so you have over that 700 score. You get a better rate. You don't have to cover your market rent if you're 75 LTV. Leave husband off, put him on title. Good to go. Program is phenomenal.
Yeah, and we only see this growing, Stacey, as and gaining in popularity, and that's why working with an expert account executive like Stacey and Oscar, you know, they'll work with you like that at the pre-qual stage. So your referral sources, no one's ended up with egg on their face. So Oscar, let's see if your audio has gotten any better. We have a question here from Ross about the prepayment penalty for this debt service coverage program.
Can you hear me okay?
Perfect.
Great. So we do have a 3-year prepay in the product. This program isn't meant for, for someone who is looking to fix and flip the property. It's for those borrowers that want to buy and hold. So, but they do have the option of buying out the prepay. If they buy it out completely, it's borrow paid. But there are rate adjustments for it. These things do change. So what I would say is you always want to default to the quick quote that we're going to show you later. And it gives you those options whenever you price out a investor cash flow scenario.
Stacey, speaking of great enhancements recently, tell us about the cash out enhancement on this program recently, the seasoning cash out.
Oh yeah, I'm like,
okay, sorry.
We have so many. So we only require, and again, kind of where delayed financing comes in. Again, people are, not to get off kilter from your question, John, but it brought up a good point you triggered in my mind is a lot of people are buying these properties cash because there's so many backup offers on properties right now. The market is so hot out there. So delayed financing is also something that you can do with this program as well. So if they purchase a property for cash, they can turn around, refinance, and get their recoup their cash that they put into it. Going off the appraised value, we only require a 6-month seasoning now. We used to be a full 12 months before you can use appraised value versus the purchase price. We've reduced that to 6 months. So after 6 months, we can use that appraised value and recoup even more of their cash. Can I add a couple other points real quick, John?
Absolutely.
So a couple other big points on this. We do have, like John said, cash out, rate and term. A lot of times what you're going to be doing is buying out a private mortgage. Maybe they had to purchase it under a private mortgage, so they just want to do a rate and term, which is perfectly fine. So we do those rate and term. Then we can use, instead of using the market rent, if you're doing a refi and you have somebody that's in your property on a year lease, we can use that year lease instead of the market rent that's on the appraisal. Purchase, we do have to use the market rent. Or again, if you're 75 LTV or less with a 700, we don't care what it comes in at. But on a refi, you can use the current lease that they have on the property right now. And another big aspect of this product that I love is, and with any of our investment properties, you can close in an LLC. So a lot of people want to put their investment properties in an LLC. You can do that. The LLC, anybody on the LLC has to be on the loan, max of 2 people, but there's no seasoning on the LLC. So you can create the LLC today and turn around and close in the LLC tomorrow. So there's no seasoning requirement on how long they've had to have that LLC, which is huge as well.
Yeah. Hey, Jack, great question. There's just a prepayment penalty on investment properties. Our owner occupied and second homes do not have that. So hopefully we answer that question. Stacey, Oscar, anything else to add? And then I'm going to go back to Stacey about a scenario she did not long ago talking about, but Oscar, anything else to add?
Yeah, something that we didn't mention early on that I'd like everybody to end this call and be able to go contact people today, find borrowers today. So a great place to go for bank statement loans, it's in the name, banks. You see a lot of banks, especially business bankers, the larger scale national regional banks, they don't have these options. So business bankers are great places. A lot of our customers are brokers and loan officers out there that do a lot of these loans, bank statement loans, get those referrals from banks. And then on this product in particular, you can go to hard and commercial lenders because a lot of their loans aren't meant to be long-term. They want to get the money back that they have out on the street. And so they can refer you a client that will fit. Well, this is an awesome solution for somebody that had to go in that direction anyway. And you can help them refi. And I promise you, if you get somebody who has a good portfolio of homes and they've got that on hard money, high interest loans, they're going to want to refinance more than one property, and we can do multiple loans.
Yeah, and that kind of takes me to Stacey's story. Perfect segue there, Oscar. Thank you. Stacey, tell us a story about that you just recently, did your 10-pack, right?
Yeah, so I had a borrower and he had purchased a bunch of rental properties at prime time for him and his situation, but he had to do them all under private lending. So I had the broker come to me and say he has a client, and with this program you can own unlimited amounts of properties. So he had a ton of properties. He wanted to refi 10 at a time, cash out. He wanted to cash out all of them, and it was a 10-pack. So I was able to do 10 refis for the same borrower on 10 investment properties, and we reduced his rate by over 2%. So he was very happy.
That's beautiful. That's a beautiful thing. Well, thank you, Stacey. And again, that's why you really need to work with your account executive, and they will work hand in hand with you on getting these deals. There's some of the easy deals done for you, but more importantly, what separates, I believe, all of our account executives from anyone else in this industry is how hard they work on your behalf and how smart they all are and how they, and the experience that they do have. So that's, we're running about 15 minutes before the top of the hour. We've had a lot of questions regarding, our one of our tools that we all love, and I'm going to let Oscar kind of take me through a little bit of a demo here of our quick quote tool. So go ahead, Oscar, kind of tell me what you want to do here.
Well, let's demo a bank statement loan. So let's plug in a scenario. Let's go with on average, our loan amounts on the bank statement program are higher because.
John, maybe, I don't mean to interrupt you guys, but maybe show them just real quick how you got there.
Okay, sure, Stacey.
Yeah, good point.
I'll go back to the home page here. So our kudos to our marketing department. We've got a very easy to use, very intuitive website. So here's our home page. You can access our quick quote tool either way. Up here, right next to the login, and you don't need a login to get here, or right down here on NonQM quick quote. So thank you, Stacey. I appreciate that.
Thank you.
So go ahead, Oscar.
We're going to demo a bank statement scenario. Let's plug in a scenario of 800,000. On average, bank statement loans bring in larger loan amounts. This is great for you. This is great for if it's a purchase transaction for the realtor that's on the other side. Let's use the average credit score for self-employed borrowers we found over the years. They have higher credit scores. So we're going with the average is about 740. So let's choose 740 to 759. The average LTV that we find is right around 75%. So let's go with 75%. Let's leave it at 0 times 30. We do a 12-month look back on housing, a 1-unit property, a purchase. And now, like we said, let's go with the 24-month option. Whether it's business or personal doesn't impact the rate, but whether the difference in the rate is whether it's 12 or 24 months. So we've got a 24-month option. And what does that say? Is that a rate in the 3s? Yes, it is. So that's 30-year fixed.
Yeah. So Stacey, tell us, a lot of questions we've had with regards to how do they get paid? Talk about, what this rate is. This is a par rate. Explain, we do allow lender paid comp.
Yeah, so depending on your company and what they signed up with Angel Oak as far as their lender paid comp plan, the rates that you see when you enter a scenario on Quick Quote is the par rate. And like Oscar said, it's a 30-year fixed. So in this scenario, it's 3.75. So that 3.75 is your par rate. Now, if you want to get lender paid comp, again, find out what your comp plan is with your company with Angel Oak, but let's say your comp plan with Angel Oak, your company's comp plan is 2%. So to get lender paid, it's a 2-to-1 ratio. So at 3.75 par, if I want to get 2 on the back, I can add 1% to that rate. So 4.75 would pay me 2. Again, 2-to-1 ratio. Now let's say I don't want to go that high. Let's add 50 bips to that rate. So now I'm at 4.25. I get 1 on the back because I added 50, so I get 1 on the back, and my other 1, I'm going to charge the borrower on the front. It's going to look like it's coming to Angel Oak because you're doing lender paid, so it's not going to look like a charge with your company. So you get 1 on the front to Angel Oak, which turns around and goes to your company at closing, and then 1% on the back through the rate. Now you want to keep it under 4. You can do 3.99, which is basically a quarter to the rate. That pays you 50 basis points on the back, and again, your other 1.5 would be on the front. So there's many different options. When we do our quick quotes and we send your quick quote back to you, it's like a pre-qual. When we send that back to you, we're going to list all your different rate options. Whether you go borrower paid or lender paid, you might see 18 different rate options that you want to discuss with your AE and figure out what's best for the borrower. If it's a refi, you might want to just roll it into the LTV. So whatever works out best for the borrower. Maybe they're not as rate conscious. They just want less upfront fees. Maybe they're more rate conscious and they want less upfront fees.
Yeah, thank you, Stacey, for explaining that. So, Stephen, hopefully that answers your question regarding lender paid comp and the add-ons there for that. Oscar, let's take them through one more scenario. Let's do an investor cash flow.
Sure. And so the neat thing is, guys, this is extremely user-friendly. All you need to do in this scenario, John, all you have to do, click income documentation, change that to DSCR investor cash flow, change occupancy to investment because that investor cash flow program is only for investment properties, and boom. So there are plenty of times when you have a self-employed person and you're just trying to identify whether you should go with a bank statement loan or with the investor cash flow loan. And again, one of the benefits that we mentioned about the investor cash flow program, less documentation when it comes to income. you don't have to wait for the income calculation. If you already have the 1003 in the credit report, you can just go to the select button in blue, and in a couple clicks, you can send that 1003 in credit over to your AE, and they can get started on structuring the loan with you. We just have to scroll up a little bit here. And so this is actually the second option, everyone. If you can export your 3.4 file, that actually helps us. You're not triggering an application at this point. What you're doing is you're just sending that file over to us, and it's just transferring the information over to us so that it makes it a little easier for us to review it.
Yep.
But if you want to skip this step, you can by hitting next on the bottom right. And when you do that, you scroll down, just verify that the information that you input is correct here where it says product and pricing. You want to confirm that you select the correct AE so that your AE gets the pre-qual, and then you'll enter your information into the remaining fields. And then at the very bottom, there are going to be a couple boxes there for the 1003 and credit. You'll need to upload those in PDF format. When you're doing a bank statement loan, there are going to be boxes for the bank statements. And the neat thing is that they can capture all of the statements at once. So if you can highlight all of your statements on your screen and drag them and drop them directly into that folder, you can. And if they happen to be all in one PDF, that's fine. You can drag them and drop them directly in there. Or you can click in the middle of the bucket, and it'll allow you to browse it on your desktop. Now, don't forget, this is extremely important. You want to hit submit at the bottom right, and you want to wait for it to say successfully submitted. When it does, that means that we got it instantly, and we're going to get to work.
Yep, great point. And then, Oscar, you've mentioned it a couple times. Stacey's mentioned it about how you can market yourself. We're gonna show you. We know we've got about 8 minutes left, but I'll tell you, this is without a doubt, the best part of how to help market yourself in outside the normal means that you usually do it. So, Stacey, if you can kind of just share, how you coach your brokers on how they can help market themselves.
Sure. So you do have to have logins for this. So once you do log in, this is going to be the screen that pops up. So where it says the marketing portal across the top, you can click on that. And then at the very bottom of that is flyers. So other things that you will see in that marketing portal is presentations, dry boards, but these marketing flyers are for you guys. It's free marketing material for you. So if you want to drop them off at open houses, drop them off at realtors because they don't have time to see you. These are great. You customize them with your own logo, your own disclaimers, your contact information. Angel Oak is nowhere on here. You can even put your picture on here. So once you log in, and you hit a flyer, pick out the one you want. John obviously wanted the bank statement flyer. So I like that one, John. You can use that one.
Sorry.
But you have all different flyers. You have the asset qualifier, the DSCR, why rent when you can own. So all these different flyers are already done for you guys. On the left-hand side, you'll see where you can upload. Here I am pointing to my screen like you guys can see me. So you can upload your logos. You have a logo that you can put on the left side, a right side, and a photo. Once you guys do this in one flyer, anytime you click on any of the other flyers, your information is already populated on there, which is great because now it's super easy. You just print off as many copies as you want and off to the races you go. So you put in your name, your phone number, your email address. If you want, you can put your address on there. And then you can choose the disclaimer for equal housing lender or equal housing opportunity. And then you can, once you click on click to see changes, you'll see all your information on that bank statement flyer right there. And again, once you do that and then you click on any other flyers, your information is already going to be customized on each flyer. So it's free advertisement for you guys. It doesn't get any easier than that. It's great.
Yeah. And just also, Stacey, just let's touch on a couple other things about, social media. Obviously, it's in all of our lives. We've already done this for you.
Yeah, again, it's work that we've already done. We're basically helping you get that information out there to borrowers, to realtors, letting them know that you guys have a bank statement program for self-employed borrowers, a no income loan for investment properties. It's done for you. I mean, again, it doesn't get any easier. You don't have to sit and think about how you're going to word something. This is already done. It doesn't get any easier. And a lot of your realtors don't know that these programs exist. And this is a great way. Everybody's on social media, no matter what, some sort of platform, whether it's LinkedIn or Instagram or Facebook. Somebody's on some sort of social media. So for you to get that out there, and what do they say? Somebody has to visualize something 3 to 5 times for them. Keep posting it. Post it every week. Get it back out there in front of them. How many times do you have to see a commercial before you realize what the commercial is about? Put it out there as much as you want, or different ones each time. Because again, you're getting your name out there, you're getting your advertisement out there. So again, we've done the work for you, try and make you guys successful.
Yeah, and then last but not least, we have our, this is, Stacey mentioned this, on your behalf, we will have your AE present on your behalf, or we've created a PowerPoint presentation for you to use and for you to brand. Doesn't say anything about Angelo. You don't even have to be an expert in non-QM. Your AE will be your subject matter expert for you. We have the Realtor Flyer event already. So why not, invite a dozen realtors to your office and have your AE present on your behalf. I think this is one of the most powerful presentations. Not only will you get a loan out of it, you will have one of your realtors want to do a loan with you out of this, because they're learning about whether it's your debt service coverage program or your bank statement program, where they are, 90% of them are self-employed. Oscar, anything to add regarding marketing?
I did want to add an example. I've done one of these, and there were up to 30 realtors on the call, and it was amazing to see, because this is a side that I don't normally see, and a lot of them happen to have already been familiar. They'd done loans with that loan officer. They had current loans that had been submitted. They were purchases, and they actually represented both sides. They were able to capture buyers using these programs, but then also with the bank statement loan program, they were actually able to get listings. Someone that was looking to go buy a larger property, they were ready to sell theirs. They couldn't get financing anywhere, trying to get pre-approved for a conventional loan, until they got financing and they got pre-approved for a bank statement loan. So this is really powerful, guys. This is helping everybody in the industry, not just us.
Yeah, Stacey, anything else regarding marketing?
No, just like Oscar said, and John, you've mentioned it too, ask your AE to come out with you. Don't feel that you have to know everything about the non-QM industry. Bring us with you. We'll be there to represent you. We do these presentations on your behalf for you. So that way, if they do have questions that you don't know the answers to, I do a lot of realtor presentations, either in person or on Zoom. And every single one, I don't know one that I have not done where I actually get somebody to come up to me and say, oh, well, me and my husband are looking to invest. I want to talk to you about the DSCR program for myself. Every single time. So bring the AE with you, or on your Zoom, invite the AE and let them help you through it. You don't have to be an expert. That's what we're here for.
Yeah, and we'll also talk about, how to market yourself differently. CPAs, we talk about our bank statement program and having to get a CPA letter if it's less than a 50%. Why not market to CPAs? They do tax returns for a bunch of self-employed people. Why not go to, and Oscar mentioned it earlier, go to maybe your business bankers or your commercial bankers for investor cash flow. Why not go to the Chase or the Wells Fargo down the street? They're not doing non-QM. Ask them what they're doing with their fallout. Why not go to financial planners and wealth advisors? They would rather have that person leave their money with them versus take more out to put for a down payment. So think about marketing yourself a little different, a little outside the box, and I guarantee you, you will grow your business. So I know we're at the top of the hour right now. I do want to give Oscar take a minute, thank you for your time today. I know you're extremely busy. You're a top producer. So
I just want to thank you all for taking the time today to join us on the call. And like I said, the number's about 3 billion that all of this is expected to grow, that non-QM is expected to grow. And the question really is that you should be taking away with you is how much of that are you going to originate? So reach out to your AE today if you haven't already. Click or send include your information in the comment box so that someone can get in touch with you. We will train you. This isn't the only training that we offer. We can do it personally with one of you or with your whole branch or the entire office.
yeah, thank you, Oscar. And it's truly a pleasure to work with you. Stacey, any last words?
Again, thanks everybody for joining us. We really appreciate you taking out the time to learn this. I think it's going to be beneficial. I think non-QM is already exploded and it's only going to keep exploding. So for you guys to get in now is perfect time. Start learning it, start learning at least the basics, and let us hold your hand through the entire process, and we'll get you to the closing table. So just pick up the phone and call us. Don't ever turn down a loan until you've at least reached out to somebody at Angel Oak first.
Yeah, thank you, Stacey. I love work. I get to work with Stacey. I love working with her. It's truly an honor. She's a top producer, and obviously you know why, the way she presents herself and her total knowledge in that non-QM space. This is being recorded. We will get this out to you no later than end of day tomorrow. And we're sorry for the questions we didn't get answered. We will get your account executive in touch with you and get those questions answered. On behalf of the entire Angel Oak family, thank you for your time and have a great rest of your month, and look forward to a strong finish in 2021. Thank you.